Hello, dear friends of Elliott Pro. Today, we're going to study one of the most important patterns in Elliott wave theory, the IMPA, impulse, or five-wave pattern. In many textbooks, we only see the classic shapes of the waves, but when we look at real markets, most traders don't know how to actually identify them on the chart. That's why in this video, I decided to explain it on a real Bitcoin chart. From the key bottom around $15,000. Bitcoin started its big rally. The price then rose to around $30,000, pulled back to about $25,000, and afterwards continued into the higher waves that made much bigger tops. Here we can clearly observe a complete Elliott five-wave cycle from the first wave that showed the beginning of the trend to the fifth wave which marked the peak of market euphoria. Along the way, we'll also review the key rules of Elliott wave theory. The first wave was when the market woke up from its winter sleep. It started from $15,000 and went up to about $30,000. At that point, most people still didn't believe the bear market was over. The media was still full of negative news, and the majority thought it was only a short-term bounce. At the same time, trading volume slightly increased and short-term resistances broke, a signal of smart money entering the market. This was the spark that lit the path for the future trend. Then came the second wave. This was a medium-depth correction, taking Bitcoin from 30,000 back down to around 25,000. Many traders expected a deeper retracement and waited for lower prices, but the market quickly turned up again. Indicators didn't show strong classic divergences, only a loss of bearish momentum compared to previous moves. Because of that, many traders were left outside the market. This wave acted as a real patience test. After that, Bitcoin entered the third wave, the strongest and most powerful wave of the cycle. From 25,000, the price skyrocketed to nearly $73,500. At this stage, doubt completely disappeared, and the market entered a phase of FOMO. The media spread positive headlines, institutional interest was highlighted, and retail investors rushed to buy. Even though average trading volume was not much higher than Wave 1, the continuous breakout of resistances and the strong momentum clearly showed big money participation. This wave is the beating heart of the bullish cycle. Next came Wave 4. A moderate correction took the price down to around $48,900. This was a shallow and sideways move, more like a consolidation. Trading volume decreased and the market looked like it was waiting. Many thought the rally was over, but in reality it was only a rest before the final push. Wave 4 is like a deep breath before the last sprint. Finally, Bitcoin entered the fifth wave. The price climbed from about 48,000 to a peak near 123,300. This was the moment of maximum excitement in the market. Latecomers who had missed previous waves jumped in, while the strength of the trend was already weaker than in Wave 3. Indicators often showed signs of weakness, and professional traders started to take profits and reduce risk. After Wave 5, according to Elliott theory, markets usually begin a large ABC correction. To sum up, Bitcoin moved from 15,000 to 123,000 in a complete five-wave impulse structure. Wave 1 was the start of the trend. Wave 2, the deceptive correction. Wave 3, the strongest advance. Wave 4, the shallow pullback. And Wave 5, the final surge of euphoria. The core rules always hold true. Wave 3 is never the shortest. Wave 2 never fully retraces Wave 1. And Wave 4 never overlaps Wave 1. This whole pattern reflects the psychology of the crowd. By learning to recognize these cycles, we can know when to enter and when to exit the market. At the end of Wave 5, always be ready for a big correction and never forget risk management.
Thanks for watching. Don't forget to like and subscribe.